Hello, it's Robert Miner with Dynamic Traders Group. This week's DT Trade Strategies for the week beginning July 11th for our YouTube and Twitter followers. This is just a brief outline and a look at a couple of markets that have probable trade setups coming up next week, and we give you the specifics about those. You want to know more about what we do? Check out our DT reports. You get a 1-month trial for $19. And that includes daily updates, a couple videos a week, and just a whole lot of not only analysis, trade recommendation information, but trade education information and trade strategies as well. Before we get started, there was no video last week because it was our 4th of July weekend, so it's a holiday weekend. I didn't do a video. And next week there won't be a video either because I'm leaving on a vacation, heading for the beach for a week. And we take off at least 1 week each quarter. And this is the second quarter week that we're taking off, even though we're already in the beginnings of the third quarter. So no video update next week. We'll resume 2 weeks from now. Okay, one more thing before we get started is I really want to emphasize, learn to trade. Don't forecast. Trade, don't forecast. Learn to identify technical conditions with a high probability outcome and a specific low-risk trade strategy to take advantage of those conditions. I can always tell when I get feedback, I get emails, or sometimes they post comments on Twitter or YouTube from someone who doesn't actually trade and doesn't understand trading, because they'll start off something like, well, the market didn't do what you said it was going to do. Well, I'm never looking to forecast. I'm looking to identify a condition with a high probability outcome. It may have that outcome, it may not have that outcome. How much money we make depends on our trade strategies and how we take advantage of that technical information. So I'm totally about trading, not forecasting. And if you want to make money, that's what you want to learn, is how to trade, not forecast. So decide if you want to be a forecaster or if you want to trade. And if you want to make a business of trading, your objective is not to accurately forecast the future, but to identify opportunities and take advantage of those opportunities. Frequently, what we think is going to happen doesn't happen, but we still can make some money on it depending on our trade strategies. And that's what the weekly trade tutorials that I do for our subscribers are all about. We look at actual trades taken, usually that I've taken, our specific trade recommendations we've made in the report, how to specifically make that trade. What's the entry price? Where's the stop price? What does the market have to do to adjust that stop, etc. We do look at what our objectives, if the trend continues as we as the potential is, and as we think it might, but that's not forecasting. That's gathering information to manage the trade if the market continues in the direction identified. So really, do you want to learn to trade to make money, or do you want to learn to forecast and to be right about where the market goes? So we're all about trading, not forecasting. Let's take a look at a couple of markets that have potential good setups coming up this coming week. The first market that we're going to look at is one of my favorites, one of the 3 or 4 markets I trade the most frequently, and that's the S&P. And you can use this information to trade leveraged vehicles, to trade ETFs non-leveraged, or just maybe 2 or 3 times leveraged. If you don't want to trade like futures, I like the futures a lot, and I do switch the not mutual funds, my gracious, ETFs, bull and bear ETFs now and then as well. So here's the daily data right up through Friday. And so again, we're going to identify a condition with a high probability outcome. I'm not even forecasting that this condition is going to be met. What I do is in advance identify if the market does this, then I'm going to do this, and then it's going to be a specific trade opportunity. So here we have, as of the end of the day Friday, pretty good up day on Friday to a new recent high anyway. But our daily momentum 13 is overbought. The 8 is actually bearish, but just if we do have a higher close early next week, it'll make a bull reversal, but the upside's pretty limited because the 13 is overbought. So we're really close to completing a daily high based on the daily momentum. Also, we have a very key time factor on Tuesday, and that's the low to low to high. Now, a lot of people look at time cycles, they just look at either high to high to highs or low to low to lows, and the traditional kind of cycle analysis. Well, we do different type of dynamic time analysis at Dynamic Traders Group, but I'll just tell you that this is a very key time factor to be aware of. So if the S&P is sideways up into Tuesday, and we can give that plus or minus a day, that just means Monday into Wednesday. Basically, by the middle of the week, ideally by Tuesday, we will have completed a daily high. Now, what's a daily high? That's a high that makes a reversal and then lasts 3 to 5 days. It doesn't tell us how far in the opposite direction the market's going to move. It just tells us that more than likely we've completed a high and then we'll be sideways to down for 3 to 5 days. So will that be a trade setup? Well, if you're a relatively short-term trader looking for those daily trends that last a few days, it'd be a great setup. So my personal trading is daily trends and weekly trends. So I always want to look when we make a potential daily reversal to enter that trade for ideally a 3 to 4 day trade against the reversal that's made, which may end up being a higher time frame, in this case a weekly trend. So let's look at this market. Here's the SPX. I'm looking at this because there's some distortion in the highs and lows in the pattern. If we use futures, you can use the SPX to trigger you into the futures trade. So here we are. The upside limit, more than likely, is around 3202 to 3227. That's 127, 162% external retracement of this little decline. This has the potential for being an ABC correction, just the potential for it. That's one wave count. There's another one that's a probability also. This is the most probable. But that's all irrelevant. What we're looking for is a specific trade opportunity. So the trade opportunity is if over the next 2 to 3 days we reach at least 3202 and we have not closed above 3226 and we make either a daily reversal signal in the price or we make one of our daily momentum bear reversals, the ideal would be on Tuesday, but if we do that, that would be a setup to complete a high that would last a few days. Might only be 3 or 4 days. Boy, some of these daily reversals that we've had, like the one last week, only lasted 2 days, less than is typical. It was a good trade opportunity, a good setup, but it ended up, because of trade management, made a little bit of money, but just a minimal amount before the market continued higher. I think we got another good opportunity coming up in the early part of this coming week. So this is what you want to look for. Look if the market continues sideways up, reaches 3202. As long as it has not closed above 3226, we make a reversal signal, daily momentum bear reversal. That's a setup for a short trade. And then the thing we want to look at is if, and I'm not forecasting again, if the S&P were to make that top early next week, if it were to continue sideways to down for several days, and if it were to close below 31.31, that's the wave A closing high, or the potential wave A closing high, that would indicate this is a completed correction. Now, it wouldn't be a specific trade setup, but it'd be a piece of information that would allow us to add additional trade opportunities. I don't expect that to happen before the end of the week. And it's not a forecast, but it's something we're going to be aware of in the days ahead. So that's the trade opportunity for the ES. Let's take a look at one more. Everybody's, or not everybody's, but a lot of people's favorite also, gold or silver. So here's gold, my favorite, and coming up from the June 5th low, we've probably completed a 5-wave advance, and that would indicate that we're then going to be sideways to down, probably for 2 or 3 weeks. At the very least, 10 to 12 days. That would be the minimum. We'll go into more detail on alternatives to how important this top is in our regular DT reports, which, of course, there's a 1-month trial available from $19 if you're interested in getting daily updates. But for right now, let's take a look at this. We came up and made the recent top on Wednesday right in what we call the end of wave 5 price target zone. And then we made a daily momentum bear reversal the next day. So that's the initial indication. We've completed the advance from the June 5th low, and as we'll see in a minute, potentially going back to the March low. But at the very least, it's a setup for a short trade. We're probably going to be short, are going to be sideways to down for another 2 to 3 days before we complete a daily low. We got a ways to go probably on the downside, number one, to confirm that we've completed that high, and then and that we're going to eventually reach the 50% retracement. But for right now, the assumption is sideways to down for 2 or 3 days. We're in a position to even now, early next week, enter short with a very acceptable and modest capital exposure for a trade that should last 10 to 12 days, maybe even a few weeks. So take advantage of this, take advantage of the knowledge that it's not a forecast, but that as of last Wednesday, we reached what would be the ideal position to have completed a 5-wave advance off the June 5th low. So we're oriented to the short side, and also keep in mind that if by chance we continue to advance to a new high, the upside should be very limited because our weekly momentums reached dual look back overbought this past week, and we haven't been dual look back overbought not since before the March low. So that's pretty significant that if this week we haven't completed a weekly high, let's just say at the latest it'd be next week, and that'd be a weekly high comparable to the April high and the May high. May only be 2 or 3 weeks sideways to down, but that would be the minimum expectation that we would have for gold once we make the weekly momentum bear reversal. So here's silver real quickly. Silver is in a beautiful 5-wave advance from the March low. I mean, this is textbook. And the top last week was a little short of the ideal end of wave 5 target. I still got a question mark there. And silver's weekly momentum isn't overbought. Gold is warning the weekly high is complete. If we looked at silver separately, we'd say it's probably not. However, they're both going to reverse together. So if one's made a weekly reversal, so has the other one. Just one or the other is usually relatively strong or weak. So here's silver daily, again, coming up from the June 15th low. We got 5 distinct sections. So you don't write me notes about the wave 4 is overlapped with the wave 1. I know that it has. So you're going to tell me in Elliott Wave Academics that that can't be a wave 4. It can be what we call an ending diagonal where wave 4 indeed overlaps with wave 5. It can do that if it's the final section of a trend. That's why it's called an ending diagonal. So that's a possibility anyway. And this Thursday, big wide range reversal day was made right in the price zone identified in advance to complete a wave 5 of 5. So it's pretty significant. Friday, we made a bear reversal. However, we made it on inside day. Inside day technical signals are not relevant. So we have to have follow through immediately on Monday with a lower close and lower daily low to confirm that that signal is good. But again, we're in a position to have completed a weekly high and an end of wave 5 and 5 high. So we can then develop specific trade strategies around that technical condition of a probable high. Well, that's it for today. Again, won't be around next week, but in 2 weeks we'll be back with our YouTube and Twitter videos, and I hope you check us out. Take care. Have a fantastic week.